There has been some relief for Europe's biggest economy. Inflation in Germany has slowed to 2.4% in August, a bigger fall than forecast by economists, while much of the drop has been fueled by a retreat in crude oil prices. Let's now get reaction to those numbers out of Germany. Thorsten Polleit is the German chief economist for Barclays Bank in Frankfurt, and he joins me now. Thorsten, thank you so much for joining us on the show today.
Thanks for the
little bit, I
invitation.
guess, of respite. Germany still has a lot of work. What would be your number one concern at the moment for the German economy, and what can the government do to actually give it a boost?
At the moment, the German economy is still in a relatively favorable position. Employment is actually at the highest level since the early 1990s. At the time of German reunification in June, around about 41 million people had a job. And also the price competitiveness of German firms is really extraordinarily favorable at the moment, and that should translate into a strong economic growth. And having said that, the major challenges really come from the global economy. A slowdown in world growth would sooner or later, of course, affect production in Germany.
Yes, in terms of the inflation, I mean, we're seeing inflation come down a touch. This is something that's going to affect, of course, all of the Western industrialized nations as the price of oil comes down. But in terms of what Germany can do in terms of spend more, because if we are looking at a global recession, a lot of the Germans are still saving instead of spending. So how do you make that switch?
Let me start by saying that economic expansion essentially rests on corporate investment, because corporate investment actually increases the stock of capital, and the higher the stock of capital is, the higher will be the real income growth, and this can then translate into higher private consumption. And this is actually exactly what has been happening in recent years. The increase in investment domestically has supported private consumption, and actually we would expect this process to continue. And with the current inflation numbers coming down, it should actually translate into higher real disposable income, and that should also support private consumption going forward.